I would want them to come on when I hit the ludicrous button.
You get sound effects.
Yeah, I mean, I'm just imagining, hitting ludicrous mode, and I hear, I can't do the song because there's too many cuss words in it. But I'm just imagining. Stafford, do you have that clip? Never mind. Just hitting the ludicrous button, and you hear "Get back, MFer! You don't know me like that." I mean, that's ludicrous.
I don't think I've ever heard a ludicrous song.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 34 of The Money Path with Bob Iacchino and Mike Arnold. I'm your host, Stafford. Today's What and the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's get ludicrous and join the team as we all talk about a conversation on the markets. And I think they're watching. All aboard!
Oh boy! Well, all aboard the rate hike train. Are you reading? Are you seeing some of these things scroll by?
Yeah, I'm watching it online though, so you're seeing it before me. Fed needs to retain new tools from crisis. How do you retain new tools?
What's that? What's this FOMC toolkit to raise rates proved effective last December? Some estimates put real neutral rate close to zero. What? I don't understand what she's saying.
Neutral or natural?
Neutral. Neutral.
So let's talk about the inference of that. If the neutral rate is zero, what's the stimulative rate? Negative?
Yeah, exactly. But how is this? I'm not seeing how this is. I mean, it's like she's talking on both sides of this rate hike thing again.
And she's got a dovish character, and I don't know. Maybe she's trying to. So the first few lines that came out were clearly, we're going to raise rates. Maybe not September, and then the commentators, they're just knuckleheads. They're just going, she didn't actually say September. There's no hint of a time frame yet. It's like next week is September 1st. Okay, she can't say it, and then you potentially don't raise rates. We're already talking. I mean, there's been Fed governors, including Bullard, who said that the Fed is losing credibility with their poor rate guidance. So then she's going to what? She's going to say September, and then what if something happens and they don't do it? The market's not going to price in a rate hike 3 weeks before the meeting. It's never been that clear. Anticipates gradual rate hike as being appropriate. Can there be more gradual of a process than we've had? Can the process get any more gradual?
Well, if she doesn't hike in September and she does one in December, so it's like one hike a year? Is that?
Yeah. Can you be more gradual? Is it possible?
Oh, gosh.
It's impossible to be more
This is going to be a good podcast because we're going to keep getting snippets. Say dollar index is back. It's reversed its course. Now people aren't thinking that, it was up, now it's down.
She's not making sense.
Yeah. The people are like, oh.
It's funny, man. The rest of it, so I don't know if she's just trying to retain. Dennis Lockhart, right? Sees twice before year end. Dennis Lockhart's the Atlanta Fed president. He sees twice before year end. St. Louis Fed president, voting member, James Bullard, said it could be September, right? And Cleveland's Loretta Mester said it's now appropriate to raise rates. But she's being very dovish while being the most hawkish I've ever seen her.
Yeah.
I'm just going to go on record now as saying she's a terrible communicator.
But
she's terrible at this.
Look, they're completely transparent.
Yeah, and I'm not saying she's a bad Fed chair, but I'm saying that one of the main roles as a Fed chair is communicating to the markets, communicating to the public, I should say, because it shouldn't be market specific. I think she's terrible at that. U.S. economy has reached max employment and has reached price stability. Mike, what are their goals? What's the Fed's goals? Max employment and price stability.
Yeah.
Apparently they've reached them. We're done. Fed can close up.
Good. Can we close the Fed?
Okay, Ron Paul.
Can they unwind their $4 trillion balance sheet now?
Yeah, that's crazy, man. They got to hold $4 trillion in order to reach max employment. And
Did you see what the other stuff that came out? I forgot who published the article. It was for one of the Fed research reports or something that came out this week that says if there's another downturn in the economy, we're not talking like a Great Recession kind of downturn, just another downturn in the economy, they would need to expand their balance sheet again 2 to 4 more trillion.
Yeah, this. The Fed needs to retain new tools from the crisis. So that basically means what you just said.
But the neutral rate is close to zero, Bob.
Wow. But yet we're at max employment and price stability, and the neutral rate is zero? And then she says, so obviously we're missing context here because we're reading headlines. We happen to be recording our podcast same time we do every Friday, and it happens to coincide with the speech. So we're seeing headlines in the way that traders might actually, right, Mike? I mean, you're in a trading room. They don't always have the sound up, and you're just kind of reading headlines and reacting. And we've seen the market react. We saw the S&P go lower. We saw the dollar index go higher. Now we're seeing the dollar index reverse course. I don't have the SPX up, but I can.
The S&P, it's rallied.
Yeah, it's rallied. So it went lower initially, and now it's rallied. It's up just under 0.5% right now, 2181 as we record. So we're seeing these headlines reacting the way traders would. How is it that a line just came across and it was a repeat line where it said economy continues to expand? So by default, if we're at price stability and we're at max employment and yet the economy continues to expand, you have to raise rates.
Well, right now the odds, we always talk about the odds based off the futures.
Yeah.
September odds are 30%. December odds are 54%.
Hey, Mike, you were a poker player, right?
Yep.
So you know odds. Is it fair to call those odds? I mean, that's absolutely what the market calls it. But since they change with trading, is it fair to call them odds?
Well, don't is
that the correct definition for them?
Well, I'm thinking because it's almost like pari-mutuel wagering, though. Those are odds, and they change constantly based off of where people are putting their money. So, and that's what's happening with the futures.
Yeah, I think it's very fair to say that the market right now has this priced. Definitely the market calls them odds. I'm just not sure if it's the right way to use the word. I don't know. Does everybody understand what dove and hawk is? Do you think everybody that listens to here understand what a dovish Fed member is and what a hawkish Fed member is?
We should probably reiterate it, and that would be best done by.
Are we talking about Pokemon again?
No.
No. Doves and hawks, their descriptions used to describe like the type of language used by the different members or of the FOMC and the different Fed presidents as they give speeches or like talk about the economy. So hawkish language suggests that they would be more aggressive in monetary policy. And by aggressive, we mean in restricting it, not in loosening it. So the Fed dictates to a certain degree, to a large degree, the amount of money that's in the system. And a hawk would always err on the side of less money, theoretically, and a dove would err on the side of more money. So a dove would want lower interest rates, and a hawk would want higher interest rates in a general sense. So when we say somebody's dovish, they're going to err on the side of lower rates. And when they're hawkish, they're going to err on the side of higher rates.
So how do you take this Yellen quote that just scrolled by? Future policymakers may wish to explore the possibility of purchasing a broader range of assets.
It scares me. I mean, it does. It scares me. It's just, I don't know. I mean, it's almost impossible to move on to stay off of the political sphere when talking about this stuff. Because, Mike, in the notes, you have something about corporate bonds, which we'll touch on later.
We'll touch on that. That's a great one.
We'll touch on that later. But I mean, these are the kind of things that happen. And when we get to that, these are the kind of things that happen when markets are not left to be, I don't even want to get into regulations or any of that stuff, but when it's not left to one person shakes another person's hand and they exchange money for a product or a product for a product, when you start getting all these hands involved, it just becomes, it's not real. The achievements aren't real, and things that aren't real aren't sustainable. It just gets scary.
Scary. Well, the market's now really taken off to the upside. So it's there.
Is it possible that the market is taking this as the Fed is confirming the economy is strengthening, yet they're still not going to raise rates, so stock prices are going to go to the moon? I mean, is it possible the market's taking it that way?
I don't know. I mean, the dollar index is now really selling off. The yen had rallied. Now it's turning lower, so the yen is strengthening now significantly against the dollar. I feel like we're doing play-by-play.
Yeah. Ben Laidler from HSBC, before the speech.
Euro's really strengthening against the dollar.
Yeah. Ben Laidler from HSBC said before the speech that Yellen was going to keep the speech neutral. And usually when you keep the speech neutral, you kind of just walk the center line. But instead, she jumped from one side of the line to the other, as opposed to walking the center line.
Yeah. Well, she's precious metals up big time.
Wow.
Every crude's up. Everything's up except then the dollar's down.
This cannot be the way that she wanted this to go. You can't think she wanted gold to go up 1.5%.
Right.
After being down on the day when she started talking.
Yeah.
Yeah, I guess it was slightly up when she started talking.
Well, this would be a good tie-in to talking about some metals, since we have a follow-up, because the silver closed below that point this week. I've been talking about that double. Closed below, triggered the short, which we're not looking to short. We're just looking for lower prices. And it got to pretty much the level where we move our stop down if we were trading it as short, which we're not. But now it's reversed at that level. It's still in play. We would not be anywhere close to being stopped out, but silver's up pretty big on this rally. Another recap. Do you have some comments on silver, Bob?
No, I don't. Go ahead. I have a comment on industrial metals in general, but go ahead.
Well, I was going to go into copper also.
Yeah, that's fine.
Copper triggered. I talked about this a couple podcasts ago, and then it didn't trigger. It actually triggered earlier this week also. Let's see. When did it trigger? I have my trigger on my chart. It triggered on the 23rd. And it ran down to lows of 207.45. I'm expecting it, if this pattern unfolds the way we expect it to go down to about the 202 level. It's up now today based off of like everything else, based off of everything's rallying right now. So it's now trading at 209, but it's still below the trigger price of the entry, which was 211.45. And to recap for people, I was looking for a close below the 212 on a daily basis. Go ahead, Bob.
I'm super disappointed in this speech. The copper is the good one, I think, because copper's rallying right now, and I think copper continues lower. And, you mentioned your trade. And it's strange because copper is doing sort of a rebalancing, sort of like crude oil, in that all the other industrial metals have rallied all year. Iron ore has rallied, aluminum has rallied, silver has rallied. The least of those three that I just mentioned, but still rallied over the year. And copper's basically been in a downtrend since February of 2012. And that's because of what China has used copper for. So China was in a building boom. They were buying copper like crazy. Copper's used not only in other things, but in building construction. And they were also using copper as collateral. It became a form of money for the black market. There would be warehouses filled with copper. And now that China's not growing the way it was, 10, 11, 12% sometimes, increases in their GDP, it's back down to just over 6%. And the IMF predicted they'll be below 6% by 2020. Copper's rebalancing to normal supply and demand prices, and then should probably rally after that, especially if Janet Yellen's right about the economy settling in, and Europe is starting to show signs of life, and Great Britain's doing great since Brexit, by the way. So copper should bottom, but I don't think it's bottomed yet. I think Mike's signal or Mike's trade calls that out as well.
Exactly. So.
Did you see this Ackman stuff?
Huh?
Did you see this Ackman stuff?
With Herbalife?
Yeah, with Carl Icahn.
I saw some stuff come by. If you want to touch on it, go ahead.
Well, Ackman went to the press and said that he was called by Piper Jeffries, to buy Carl Icahn's stake in Herbalife. So Carl Icahn wants out. Carl Icahn bought the stock, disclosed somewhere around 32. He sold some of it higher in like the 50s. And now I guess that his stake is so big in Herbalife that he's asking to sell it to Ackerman, and Ackerman could pay a little bit better than he could pay in the market, or get a little bit better price than he could do if he were to buy it in the market and cover some of the shorts with it. But he right away went public with that because he wanted the stock to go lower. So,
and it has gone lower. Nice
so,
big gap down.
Yeah.
Currently trading against his 200-day moving average.
Yeah, so I don't know if Ackman wanted him to go public. I know that it came through Piper Jeffries, but he was very complimentary to Icahn during the whole interview. But he immediately went to the press and he's like, I want you guys all to know that Carl's selling out.
Would you want to give some backstory for the people who might not know?
Yeah, so Pershing Square is the name of Bill Ackman's hedge fund. And he took a much publicized short position. God, how long ago?
It's been years ago.
It's been a while. And he basically took the company to task for being a pyramid scheme. And he went after, he went to the government and he went to the FTC. And he said, you need to investigate this, because now he did this all as he was taking a short position in the stock. So he got completely crushed on this trade because he started selling it, I believe, in the 30s. And he rode it all the way up. He rode it up to as high as $80. I mean, it's just getting crushed. And this particular, he's also had problems with Valiant. He has a much publicized long position in Valiant when Valiant got killed. So he admitted today on CNBC that this is the worst performance of his entire investing life, has been the last couple of years. And it has a lot to do with these two stocks. So he was very open about that. But he said that there's reports out now and people are starting to understand that Herbalife is a pyramid scheme, and he thinks the stock is going to zero, and he has not sold or not covered any of his short positions at all.
Well, didn't the government come out and said it wasn't a pyramid scheme, but they have to substantially revise a lot of their practices or something?
Right. They fell short of calling it a pyramid scheme. They said it's a perfectly fine business. It's not a pyramid scheme, but we need you to make these revisions. And Ackman maintains that those revisions basically prove it's a pyramid scheme because they're making them revise all the business practices from which they actually make money on.
Right. They're making them redo their whole model, and that's what the company is based off of.
Right. So Ackman's quote today was, I think if Carl sells, it can accelerate the demise of the company. I think he knows that this thing is toast. Those are quotes.
Huh.
So, again, it'd be interesting to see if, Carl Icahn gets publicly angry. He is a very angry old man when he wants to be. And he gets publicly angry. So it'd be interesting to see if now, the stock gapped down on the open on this news. And Ackman came on TV before the market opened. So, it was a calculated thing. So, again, it would be interesting to see if Icahn fires Jeffries over this, or I don't know. He certainly could have sold his stock yesterday at about 61, and now we're down at about 57, 70. So, I'd be pissed.
So now people are up to speed with Herbalife.
They are.
But here's something people aren't up to speed with.
What's that?
This is a tie-in with Netflix, because we have to have our Netflix update because we've been following this for months. But Netflix is rallying. So I guess the Democratic People's Republic of Korea, aka North Korea, they announced a new Netflix style. It's a Netflix knockoff streaming service. Did you see the name of it?
Yeah, I saw it.
Man Bang.
Yeah.
Which, all right, let's go. Let's make this in Korean. Man Bang means everything, but you can take it a little differently. Now, the funny thing is everything's controlled in North Korea. I doubt they even get our podcast, but they're hooking up a Roku-style set-top box, and it will be access to pretty much all the programming is North Korea's government history and leadership. But nobody, how many people have internet in North Korea? I mean, it's very few have internet, and then the people, you can buy your Netflix knockoff streaming box clone thing that you're going to watch government propaganda. So I don't think Netflix is too worried about it.
I hope this isn't a racist comment, but I would like to buy that if I could, because I just think it would be so unbelievably entertaining. I mean, I imagine 40-year-old ladies in Korean dress dancing sideways, just singing the emperor's name. And I don't just imagine it to be so crazy.
It would be very interesting to see the government propaganda that's played, I guess, 24/7 now. You can stream government propaganda 24/7.
William Blair upgraded Netflix to an outperform, and they breached the top of the 14-day trading range. The previous top, I believe, was around 97 something. I can actually look that up. But their 14-day trading range wasn't quite a sideways channel. It was more like a triangle. Excuse me. But yeah, the previous high, August 5th, 97.74. And their 14-day range, the low of the 14-day range was 95.18. And the intraday high yesterday, lost it there. Intraday high yesterday, 98.24. So breached that 14-day trading range. Not quite a technical recommendation of any sort, but it was interesting.
No, we have
again today.
We have a breakout of a really short-term horizontal channel that's been triggered. Next target higher for me is essentially the 100 mark again. The 200 day moving average, which is a pretty big magnet, is trading right now at 157. And so that's going to be the next target for this on the higher side.
Analysts love this stock. I mean, if you go down the list of analysts on this thing, BTIG reiterated its buy rating, Canaccord Genuity, buy rating, Cantor Fitzgerald reiterated its buy rating, Drexel, buy rating, Goldman, buy rating, Morgan, buy rating, Merrill Lynch, buy rating, Morgan Stanley, buy rating, William Blair, again, from market perform to outperform. I think the worst rating I can see on here is BMO has it as a hold. I mean, analysts just love this stock. Doesn't mean a whole lot to me, but analysts just love this stock.
But then is it priced for perfection?
Yeah, exactly. Right. I guess North Korea is their competition now, not Amazon Prime.
It's not Amazon Prime. It's the Man Bang service.
It is. I hear this ding dong dang music with sideways old ladies dancing. I don't know. It would be amazing.
Intercut with a submarine launching a ballistic missile.
That doesn't actually. It's actually on a string. They're
Imagine
pulling it through the air.
Film at 11.
Aren't they the only country that from space is completely dark because they don't
pretty
have
much dark? Yeah.
Yeah.
You see the space shot. The Earth at night, and North Korea's pitch black. There's no city lights.
So if you want to watch Man Bang, you gotta get on your bicycle to the generator.
Yeah, you gotta pedal really fast. Well, that's a great segue.
Into?
See, I have to have my weekly Elon Musk update on something that he's doing. It could be SpaceX, it could be Tesla, it could be Solar City. But this happens to be, we just have to mention it, nothing about the stock, but I for some reason, I need a sound effect. I need a Tesla, Elon Musk sound effect, because they just unveiled their new battery for both their SUV and their sedan. The P100D, which is the ludicrous mode, which I love the name of that, the ludicrous mode. But this will give it more range. So now it's 315-mile ranges for, I guess, the sedan. And the sedan will go from 0 to 60 in 2.5 seconds.
That's awesome.
2.5 seconds. And the SUV, SUV Model X is 2.9 seconds. It was, but 2.5. I mean, some motorcycles don't go that fast.
They say that it's not the speed that kills you; it's the sudden stopping.
Yes, it's not. As you black out, I wonder what the G forces are on that one. 0 to 60 in 2.5 seconds. That's got to pull some G's.
Is any one of the big car companies considering buying Tesla?
I think if at some point they really stumble and their stock takes a massive hit, someone of the, because they have dubious financing. I mean, I think it's all a house of cards. It's not. I'm not talking about the products. I think their product.
Talking about the stock.
No, I'm talking about the stock. Yes. Yeah. I could see Tesla at some point, the stock unraveling, and then some major car maker picking up Tesla in some way, shape, or form. I don't think Tesla cars are going away. They pioneered some great technology. Their self-driving stuff is fascinating. They push a technological curve. It's just, I am very leery of the stock.
The real weakness in Tesla is that all their technology is off-the-shelf flashlight batteries, laptop batteries glued together. So they've licensed all their technology to like Mercedes and other companies, and everybody's reverse engineered it. There's nothing special. It's all off-the-shelf parts, and they glued it together, and they were gutsy enough to do it. So I don't know if there's really any value in it except for the factory and the robots and the head count. But the technology is really actually, people are reverse engineering it and building their own electric vehicles.
Yeah, we'll see. Well,
I haven't found the Achilles heel in this yet, but it's there. I mean, I agree with Mike that the Tesla cars aren't really going anywhere, but I mean, there's been some supercars that have drifted away, isn't there?
Yeah, but they're not just super. I mean, they're supercars in terms of their performance, but
right, and their price.
And their price. Well, if you go with ludicrous mode, which you don't need to get ludicrous mode.
All right.
I mean, even if you get some of these other, there's 0 to 60 performance, on the all-wheel drive version of these cars, even in non-ludicrous mode, is pretty ludicrous.
Is there a button where the thing actually says click here and the word ludicrous lights up?
There's a ludicrous modes button. Yes.
You can do an in-app purchase in your car for it.
Yeah, so if you don't have ludicrous mode and then you're really regretting that and you're sitting at a stoplight and, some Ferraris next to you and you go, I need ludicrous mode, you can call up your smartphone, purchase it, it'll charge your card, and it will then activate. So then
here's where I love this, because it's got to be Ludicrous has to have signed a deal with them, right?
Nope.
It's obviously no, but it's a word, right? They don't have to sign with Ludicrous,
right.
But they have to sign with Ludicrous, right?
But I don't think Tesla's going to replace the Escalade as the top-end bling vehicle. I mean, even the rappers are down on like the RAV4. When I was your age, I was in a RAV4 with nothing. Now I'm about an Escalade. I don't see them blinging out a Tesla like that.
Very good. You notice that. Kanye West, quote, Chicago rapper, I think he's insane. But he has a line that says, what do you think I do this for? Not to push an effing RAV4. That's actually a quote from one of his songs.
Well, now you're expanding my horizons, but can I elaborate on, since we're sort of talking about Ludicrous and I'm not talking about the artist now.
By the way, they did win. I'm sorry, Mike, but they did win U.S. antitrust approval to buy Solar City also. So
okay, there we go.
Yeah,
that's a good update. Thank you.
Yeah, you're welcome. 2 hours ago. Shoot.
Well, I did not see that, so you scooped me, man.
It's all right. We're on the same team.
No, this is ludicrous to me. The Wall Street Journal article, Seller's Paradise. Companies build bonds for European Central Bank to buy. So essentially, and they're citing 2 European firms have sold debt directly to the ECB through private placements. This is an example of how the market is adapting to the extremes of the monetary policy. So essentially, these companies are making offerings with the sole intention of the ECB buying them. So it's not even like we don't even have to go to the corporate bond market. Hey, ECB, we're just going to design these bonds that we know you want to buy, and you can buy them directly from us.
Just giving money to companies, just giving it to them.
And the companies are like, hey, they're tailoring these bond offerings specifically so the ECB will buy them. That's the only reason they're issuing some of these things. It's like, here, give us money.
Oh, we do not have the best and the brightest in the government. We just don't.
That's where, to tie back what Yellen was saying earlier, future policymakers may wish to explore the possibility of purchasing a broader range of assets. Scary! That's my scary voice, by the way. Scary!
Shelter supplies.
By the way, it's not in the notes, but shouldn't we touch on this EpiPen thing a little bit?
Yeah, the way the price increased in a few
government
years
collusion.
2 for $100 to 2 for $600.
Yeah,
but now they're going to cut it by 50% after the attention was raised, so it's going to be only 2 for $300.
Okay, so hang on. Is that new? Because what they're actually doing is as of yesterday. It may have changed. It's a constant. The situation's in flux, but they were issuing a card that you could get $300 off, and they weren't issuing it to everyone.
No, it's only if you showed need.
Yeah.
But go over the story, though. I mean, how this...
All right, so here's essentially what happened is there was a New York Times article about how the Mylan, who bought the EpiPen from a German pharmaceutical company, right? The EpiPen, for anyone who doesn't know, I think everyone knows by now, but it's an instant injectable for people who go into anaphylactic shock due to food allergies, mainly food allergies. But it could also be bee stings like that. Yeah. So, by the way, so the CEO, Heather Bresch, they interviewed her. So the price of the EpiPen has gone up 17 times since they bought it. And there's been no marketed improvement to the product. They added a safety to the injector. They added a blue cap.
Well, blue cap.
Yeah. But essentially, from what industry insiders say, it costs them $3.50.
Yeah, and it's off patent, so it's nothing special medically or technically.
Right. So now the CEO's father is Senator Joe Manchin, by the way, who is a senator from I don't know where, but he's a senator of some sort. So her father's in politics. Now, she's the CEO of this company. She comes on CNBC and she said, it's the system, it's not us. So we need to keep this, we've raised the price of this in order to be able to provide EpiPens to everyone. Now, it seems weird to me that you raise the price of something in order to provide it to everyone. Usually you would make it free, or you would lower the price.
You'd lower the price.
To make it, yeah. So what she said didn't make a whole lot of sense to most people. And I watched the interview, and I remember thinking, what is she talking about? She's giving no specifics, and she says there's 4 or 5 people that touch this product before it actually goes to market. And Brian Sullivan, who did a great interview with her, said to her, so how much do each of these get? And she goes, well, it's not transparent. We don't really know. But we all know that her markup, Mylan's markup, is 50%. Their profit on this product is 50%. So 50% of the list price. So it still costs them $350 to make it, and they end up with $300. Now, the distributors, Walgreens, people like that, they make a ton of money on it too, but everybody's making money on this. And it becomes this big thing because it affects so many children. I guarantee you this is not the only drug that this has happened with. There's no way that this is the only one.
How 8 years ago this thing was selling for under 100?
Yeah.
So what in 8 years? How did their cost of manufacturing go up to in the 300s if they're only making 50%?
Yeah, no, I mean it didn't. They just raised it because they could.
Right.
And here's the thing, like, I'm having a lot of trouble being mad at her. I really am. And I'll tell you why. And this has nothing to do with ethics or any of that, but there are 3 products at the FDA awaiting approval to compete with this. There is no competition for EpiPen. And for some reason, the FDA is not approving these yet. So that smacks of one of 2 things. Lobbyists that potentially Mylan pays. I don't know. I mean, that's a speculation. I don't know that for sure. But release generics. Let the generics through. As Stafford mentioned, the medicine's off patent, right? Let the competition in. The medical industry is so regulated and restricted, and FDA guidelines are so strict. There's 2 or 3 competitors in Europe that compete with this product.
Yep.
And they're not approved here.
Healthcare for all turned into healthcare for none when the government took over.
Yeah.
The entire healthcare industry.
Yeah. I mean, there's no competition. So what did she do? She raised prices because she could. And her compensation went up and the share price went up and they beat, and it's all great. We got all these shows like Fast Money and Jim Cramer and all this. And, everybody wants stocks to go up. Well, sometimes this is what happens when all you care about is that stocks go up. You don't care that a company is doing things the right way, or that a market is free, or that a market is open. You get the government involved. You get those middle parties involved like the FDA, and this is what happens.
You don't even get me started on the FDA. But see, but here's the whole thing. Now everybody's outraged, and, people in the government are calling for, we should, we got to step in and fix this kind of stuff. Well, you caused it in the first place. How about we get our inane FDA out of the way on a lot of these approvals, because it's a nightmare what these drug companies go through.
FDA funding over the last 4 years increased somewhere in the range of 60%, and drug approval times went down. I mean, they went up. Sorry. They went up.
Yep.
So they were given more money to do things more efficiently, and they slowed.
Yeah, I got to go on another. Did you guys see that one thing this week that I thought was absolutely insane? And this is off the topic of the markets, but it's on the topic of the government, and I just want to mention it. Where with all that flooding in Louisiana, the Cajun Navy, which is essentially a bunch of people in Louisiana who have boats and everything, they're going around helping rescue people because
Good Samaritans.
Yeah, their people aren't getting rescued in time by the government, So these people are helping, they're going into some of these towns have just been completely obliterated with flooding, and people are like stranded on their roofs, and they go night and day and go pick them up. Well, now one of the Louisiana lawmakers said, he just introduced a bill saying, you know what? Well, you need to be trained to do this. You have to have government training. You have to go get a permit and pay a fee if you want to go rescue people and help people who are stranded. Because, I don't know, you might not do it right.
Wow.
But
they just want those people gone. Whoever they is, I don't know.
But think about it though. You're you're being a good Samaritan now. Oh, let's make you. Your town just got flooded. You're trying to rescue people on a boat. Where are you even going to go to get the permit?
The place that issues the permit is flooded.
Yeah, the permit office flooded. But you breaking the law now because you didn't get your permit to rescue your neighbor who was stranded on a roof? Sorry.
I'm waiting to see a health department official stop at the local lemonade stand that the 6-year-old girl's running down the street right now.
They already do that.
Yeah, they do that.
Because you don't have a business license. Really, my kid's running a lemonade stand, and they don't need a business license. Oh, I feel better now. I actually feel relaxed because I sort of got to do a government rant.
What else we got, Mike?
Oh, I got lots. Well,
And I don't mean government.
I got to get away from the government. I got another question for you, though, Bob.
Shoot.
Are you going to get your Visa-powered payment ring?
Yeah, I saw that. No, I'm not.
You're not?
No.
Now, if anybody doesn't know about it, you can now pre-order your payment ring. It's this black-looking ring. They had it at the Olympics, I guess, for the athletes, which you set it up, and then you can tap on the payment terminals, and therefore you don't have to pull out your smartphone to do, the quick pay, or pull out your watch to do the quick pay. You just wear a ring. They're going to be selling it for $53. I'm just wondering, what if you lose the ring?
I mean, there's got to be some sort of biotechnology in it, no?
Not for $53. I just.
But I mean, I'm just saying it gets picked up by the machine, so there's some sort of electronics in it.
But
right?
Do you have to type in a PIN or something, or is it just automatic? Like if I pay with my phone or my watch, it just goes blip, and I say authorize, and it authorizes. I mean, but now you're just holding up a ring. How do you know that it's on the person who it's supposed to be's hand?
The finger is part of the transaction, right? You have to just cut your finger off?
I don't know. It's something I'm wondering.
Don't tell the Chicago mob that. They'll start cutting fingers off.
Yeah.
No, so it's connected to a smartphone, is my guess.
Yeah, it's got to be tied into your smartphone, but you don't have to take your phone out of your pocket. So
right. So I mean, I assume if you take the ring and you don't have the phone, it doesn't work.
They probably got this one.
Hold on. But once it's all set up, you won't even need your phone close by to use the ring, as it uses anonymous tokens to make payments.
So how does it? All right. Is this going to propel Visa stock to all-time highs?
No.
What?
This is not. A stronger consumer could, but this is not.
No, but what's interesting is I just wanted to do this tie-in because Visa stock, if it can get a close, just letting everybody know, a close above the 81.73 level, where it's broken above a level that it's tested, then we're on the fourth test of this level. And if we get a close above that, this thing will make a quick run. The targeted GAN projections are 84.25 in the short term. So just watch for those numbers if you're bullish on the Visa stock. And there's dead air.
It's not a problem for this show. It all gets cut.
No, I like financials right now. I mean, I liked them more before Yellen's speech, but I like them in general. I think a rate hike's coming. I do now.
Oh, now hold on.
Yeah.
Hold on. I'm just looking.
Do we have more?
At the new rate hike odds, because we got, this is a live, people don't realize that you're tuning into a live, we're doing this, I guess we couldn't be doing it if we're dead, but this is unfolding information. The odds now of a September hike have now fallen from 32% to 26%. But December...
Wait, they've fallen?
Yes, they're going down.
Mm-hmm.
November's at 33.9%, and December's now up, though, to 57.2% from 50% earlier. So it looks like people are saying, not really September, not really November, but we're really shooting for December.
Like from Benzinga, Benzinga's news desk, unusual options activity. Bank of America, 16 calls, 33,000 were bought above ask. 34,000 traded. Total of 34,000, but 33,000 of them were bought above the current ask. That's the only one that's interesting to me.
Well, hold on. That's interesting. Yeah, Bank of America
was up.
Yeah, it's let me just check something. This is a more real-time analysis because I have to do some real-time analysis to make sure it fits within our structure of a pattern. So this is where I need more sound. I need my, Ooh, exactly, nearly to the penny, triggering a sloppy double bottom that just squeaked into the penny on the right side bottom, hitting the 75% GAN level.
Monthly chart or weekly?
Weekly.
Okay.
Looking like it's going to the high 1530. If we get a close about 1530, right now we're trading 1562. It triggers it, but I think it's going to go beyond the pattern. I think it's going to extend beyond the recent highs. We have to do our very thorough analysis.
Look at the monthly when you get a second.
Will. Ooh, 75. Ooh. If this pattern unfolds, this means we had a high earlier. When is that? A high. Oh, this is a weekly chart. I can't go earlier. This wasn't this year. It was last July, the 20th, July of 15.
Mm-hmm.
High of 1848. The pattern of this comes in at essentially 1850. This triggers, you can see Bank of America going to back to retest its highs from July of 2015. Look at that real-time analysis.
I like that.
That's
That
good. With the sound effects and everything.
Yeah. So we got huge call purchasers. We got potentially a technical trigger. I'm sorry, Mike. Do we have it, or we potentially have it?
Unless we get a massive sell-off today, it will trigger.
Okay. On the monthly or the weekly? The weekly.
The weekly.
Okay. The monthly one.
This is going to take. It's a good point, Bob. Let me just call up the monthly chart. Let me look. Yeah, I mean it's a very nice pattern on the monthly. So I'd probably trade it off the monthly because I think this is going to take at least a series of weeks to unfold.
Yeah.
I'd look to trade this, so I'd probably wait for the monthly close on this. It's a cleaner looking pattern.
I don't generally look at monthlies until we get to the end of the month because it's so.
Well,
I mean, you need the monthly close, but we're there.
We're close.
By the time we do the next podcast, it will be September. So
it will be September. Oh man, time is flying.
Yeah.
You want to know a stock I would not be buying?
Yeah.
Sears Holding.
Yeah.
Oh, this is painful. This is just the slow death.
Once they lost the Sears Tower, it was all downhill.
Well, they're a REIT basically now, aren't they?
They are essentially, but they released their earnings this week.
Mm-hmm.
So their second quarter revenue $5.7 billion versus $6.3 billion. Their adjusted loss per share was $2.03. They're just not looking very good. It actually ran up on a weekly basis, tapped the 50-period exponential, which is a key moving average we watch. The 50 exponential, weekly exponential. Now it's turned back lower. It's back below the 20 again. And I would not be surprised to see this year retest its lows, which were at 1052. And that was made, when was that made? That was made back in May of this year.
Mm-hmm.
No, sorry, in April of this year.
Yeah, they got a $300 million loan from their CEO's hedge fund.
Yeah, I saw that.
Chief Executive Edward Lampert's hedge fund, ESL Investment, gave them a $300 million loan. So he's the CEO, but he also has his own hedge fund, and he is loaning $300 million to Sears. I don't think they disclose what the rate is on that. I'm assuming it's above market. But it's so strange, man. If you would have told me when I was, 8 years old getting jeans in the Husky section of Sears that someday Sears would be posting a loss, and if I were old enough to understand what a loss was, I wouldn't have believed you. Everybody went to Sears.
I know. And now I think they're closing like 80 more stores this year, and they said a bunch of their stores are coming off lease.
And that was the only place you went for tools and car batteries.
I before Sears goes into oblivion, I bet you they at some point sell off their whole Craftsman stuff.
And Die Hard and those name brands, they'll spin those off.
Like somebody will pick up Craftsman.
Yeah.
Yeah.
But I don't see Sears doing anything that I don't see it being able to turn it around. It's lost its mojo.
Yeah, they waited too long to do a complete rehab, which I never understand why companies, when they do a complete facelift, they don't change the name, because that's really what they should be doing.
They should have. That's what I was thinking about earlier this week, and you just brought that up. I think they should have renamed it.
Yeah. So now, who else is going through that right now is Express. Express is starting to have image problems, and they're starting to have sales problems at the same time. And I don't know. I mean, there must be something in the retail world that says that that's suicide to do that. Because if it were me, and you realize that at some point when your mom shops at Express and you're, a 13, 14, 15-year-old girl or boy, you don't want to go where your mom goes. So unless the name changes, you end up going to a completely different store. And I mean, their stock isn't doing terribly. It's symbol EXPR, Mike. I know it's not in the notes or anything, but it just jumped into my head when I read that their whole it's getting crushed today.
That's getting crushed.
I mean, it's got a huge gap.
I have a monthly chart up.
Mm-hmm.
I mean, its all-time lows back in 12 were 1047. It's now trading 1176. This thing's going to retest those lows.
Yeah, I mean, Stafford, if you're able to cut out where I said the stock's not doing that bad, because I was actually just looking at a web thing as opposed to my chart. Actually, leave all of this in, because I don't want anyone thinking you cut anything out. No. Leave in that I asked you to cut it out, and then leave in that I'm taking that back. The stock's doing horrendous, and it's actually ranked as one of the worst retail earnings of this particular season.
We have a sound effect for this event.
What is that?
Yeah, there you go. UBS downgraded Express as well. UBS downgraded it to sell from neutral.
It's going to retest its all-time lows, and they're finally going, well, maybe we should sell it.
Yeah, they cut the profit target from 16 to 10. So it's at 1169. It was at 16 when they got downgraded. Oh, no, I'm sorry. That downgrade was this morning. So they missed it by a couple days. But no, but I mean, it's an image problem, right? It's like my sister's in her 40s, and she will still run to Express if she needs something. And you think my nieces, her daughters, want to go to Express? They don't. So, I don't understand why they don't change it up to, I don't know, the Internet Mem Girls store or something that's cool. The selfie store. I don't know.
This is why you're not in retail, Bob.
I'm not in retail.
Because that was really bad names.
I like those. I like them.
I'm going to open a store called Selfies. You'd be able to try on the clothes, and there's automatic machines for selfies. I should be in retail.
No, don't quit your day job. Don't go anywhere near this. A company that's demise was greatly exaggerated, and did you see Best Buy this week?
I didn't actually. What happened?
Wow. They've been talking about Best Buy. It's everybody shopping at Amazon, and they only use Best Buy as their showroom to go figure out which products they want to buy at Amazon. Well, Best Buy second quarter earnings per share 57 cents versus expected 43. Revenue $8.53 billion. They expected $8.4 billion. Now they've been guiding lower, but their stock it's up huge this week. They're going to retest. They're on target to retest their highs from 15. They've already passed their highs from last year. As of this recording, they're trading right now at 39.65. Looks like they'll probably look to. I don't have a chart pattern or anything for this, so this is not based off a technical chart pattern. But their highs back in 15 were in March of 15 were 42. So I wouldn't be surprised to see them at least retest that area.
Raymond James upgraded them, lifted their price target to 45. This is a good analyst move, this one. I make fun of analyst move a lot, but I think it is newsworthy for people who are looking at the stocks. Generally what happens is analysts do exactly what I don't remember the analyst I said, but the last stock we were talking about, the Express, where the analyst downgraded it to a price it was currently at. That happens a lot. But Raymond James had a $38 price target. It reached that, and then they jacked it up to 45. They have a new price target on it once it reached their price target. So they didn't move it and say, we were at 52, now we're moving it to 38. You see that a lot. No, so Best Buy, again, Raymond James did that upgrade, which is kind of cool, and they're kind of the poster boy for bricks and mortar not being dead. But I think they're in a niche, right? I mean, Amazon sells TVs and stuff, and Best Buy is competing with them now. Tiffany's didn't guide down. That was weird.
Tiffany's did not. They reported an unexpected rise in second quarter profit driven by lower raw material costs, price hikes, and the sale of more high-margin jewelry.
Yeah, I saw this as a very positive report, and I kept looking for where they guide down, and they didn't.
And I'm bringing this up because this is actually a technical pattern we talk about many times on a weekly basis. I guess you could even look at it on a monthly basis, probably. I was looking at it on a weekly. Yeah, you could do it on a monthly, too. But back to the weekly, we are looking at a pretty large double bottoming pattern, which has it's a confirmed double bottom, which means price is traded through its prior peak high. But that does not mean we trade it that way. We always wait for a close above that peak high, that high being 74.06. So I don't know if this will trigger today. Right now it's trading 73.89. But if it does trigger, and this could trigger either on a weekly or a monthly basis. This is another one of those, Bob, that we could do. This would be a two-target trade, and we'd be looking really at the 84.80 level, and the second target would be the 88.38 level. So that's something that we do have a pattern on that, if it triggers, could propel Tiffany's even higher.
That's nice. Tiffany's is a good stock when the stock market is going up and they're not guiding down. So they clearly, they've been guiding down probably the last 3 or 4 earnings reports. They guided lower, and they didn't on this one. I thought that was significant.
Now, on the other end of the Tiffany's spectrum, we have Dollar General. You want to have any comment on that one, Bob?
Second quarter earnings in line with expectations, as revenue fell below Wall Street forecasts. I strolled into a Dollar General for the first time ever, and I didn't realize that not everything is a dollar.
Things are generally a dollar. That's why it's called Dollar General.
Yeah, I thought everything would be a dollar, and I grabbed they had a used car lot. I grabbed a car and thought it was a dollar. No, I was walking through there, and it was amazing. I'm like, why have I not gone here for things like shampoo and razor blades and stuff like that in the past? Tell me why, because I bought, so it's always like the weaker model, right? It's always like the 2 or 3 or 4-year-old discontinued kind of model.
Like the dish soap is not of real quality dish soap that you're used to. Those sorts of things. They don't have like protective caps. You can get some shady products. It's probably great for plungers, great for hamper baskets.
Hamper baskets? That's
$1 at a dollar store.
Is it? Yes. I need a new hamper basket.
Go to Dollar General or $20 Admiral.
I bought sunglasses there that were not $1.
I would not recommend anything that is a liquid in a container.
That's interesting.
How about things you consume?
I got it from Man Bang.
Edible things. Would you recommend edibles from Dollar General?
If they're sealed in a can, we might pass it, but avoid the beef jerky.
Again, purchase from Man Bang.
But this is where you need the cow effect. Come on. I need a cow. Yes, thank you. Their stock got hit hard. It got hit hard. It was before they released this earnings. It was trading around the $91 mark. It gapped down to the $81 mark and then sold off promptly to, what was the lows? The lows yesterday. That's not the right day. The low, 75.13. So they were trading at a high earlier this year of 96.88. Now they're down to 75. As of this speaking, they're about bounce. We have the dead cat bounce to 77.19.
Yeah, awful chart.
Yeah, this one I would not be touching with a 10-foot pole right now.
Mm-hmm.
I would not buy into the dead cat bounce. Especially, did you know today is National Dog Day, Bob?
National Dog Day?
Yes. It's the
didn't know
National
that.
Day of Dogs. So I would not buy a dead cat bounce on the National Dog Day.
BMO downgraded them. Dollar General. Yeah, from outperform to market perform.
And now, do you have anything else to say on Dollar General?
Yeah, I think that downgrade is interesting because right now, Dollar General, the dead cat bounce that Mike described, has them up 1.8%, and the S&P is up 0.5%. So that is kind of market perform. It is performing almost with the market.
The market seems very confused today. Now it's come off its highs. The dollar index is back up.
This was, to me, again, I've said this earlier, this was hike talk from Yellen. It really was.
So you think it's a September they're going to hike?
I'm not saying September, but they're going to hike this year. I think it should be in September, yeah. I think the September hike would be the best thing for any number of reasons I could go into, or I don't have to. It's up to you guys.
You're free to talk about it. We can't hold back the Iachino.
The September rate hike, to me, proves they're not political, even though it really doesn't prove it.
It doesn't prove that.
No, but they're able to say it then. They're able to say it. Yeah, we weren't concerned with the election. We were concerned with the economy when asked.
All right. Well, there you have the insight. I would still be shocked if they did hike in September. I would not be surprised at a December hike, but a September hike would truly shock me.
Again, let me make myself clear. I'm not saying they're going in September. I think they should go in September.
Right.
I don't necessarily think they will because they are political. They are a political animal. Because if they weren't, when they're testifying before Senate and Congress, and these lazy asses in Congress are saying, you have to do more, the Fed chairman should say, why don't you shut the F up and you do more?
This is why Bob would never be head of a central bank.
Yeah, I'd be like, you know what? I should do more. Blow me. How about do more of that? How about you do more of that? I'm busting my ass over here, and you guys are freaking talking about EpiPens when the economy's going to hell.
Yeah, uh-huh. And there's Bob's. Do you feel better? That was sort of a mini rant.
Political corner.
Worse.
Political corner.
We've had a lot of. I like this. We got to leave this political corner in here. This is a good thing.
I feel worse.
Yeah.
What else we got?
Speaking of political corner, GameStop.
Why does anyone want to buy this stock? Remember, I'm not a gamer.
I was going to ask Stafford why games. Hold on. Let me just go through the numbers first. They reported lower than expected quarterly revenue, hurt by lower sales of new gaming software and hardware. So their net sales fell to $1.63 billion from $1.76 billion, missing analyst estimates of $1.72 billion. So they're just missing stuff. Net income rose to $27.9 million or 27 cents a share from 25.3. So their net income rose. They earned 27 cents per share. Yes, so it was in line, but their net sales fell. Why are?
Here's your fast backgrounder.
I need to know this stuff.
Here it is. Okay. 20 years ago, we bought these video game systems, right? We were kids, we were young, we played these things. Then they all got really cheap. They were pennies on the dollar. And these game stores would buy your games and could mark it up a little bit, and there'd be this trading of these games. Now everyone is collecting these games in their 40s and 50s, right, to recapture their youth. So now these games go for $400-$500. So the entire low end, there are no games anymore, and the ones that are out there are expensive because people are completing entire collections of Intellivision, ColecoVision, Atari 2600, complete runs of all the cartridges. And
Wow.
it's all over the internet. There's huge people doing these things. So it's created, everyone checks Craigslist every day. They try to find these games forgotten about in some backyard, but they are going through the roof. It's like Porsche prices.
Wow.
Hold on, what was the Atari cartridge that was the game was such an abysmal failure? Like they dumped them out in the middle of the New Mexican desert.
Well, what that all was Atari was owned by Warner Brothers, or a large conglomerate at that time, and they needed to just dump stuff because the entire market crash had happened. They made more ET games than they actually had game machines.
So they dumped ET in the middle.
They dumped everything. They found that landfill, made a documentary about it. It's terrible.
That was the ET, but that's sort of ironic. I mean, that tied in. Did they dump it in Roswell? Since we were talking about yelling stuff, let's just touch on some other news that came out. So home sales, newly built homes rose in July to the highest level in nearly a decade. Interesting enough, rose 12.4% in July. So that beat it. However, existing home sales decreased 3.2% to 5.3 million. So new home sales rose, existing homes did not, right? But they're citing that existing homes are the sales are decreasing because prices are up and inventory is down.
That's interesting, right? It's so people are not able to reach up to these new prices, I guess is the assumption.
Yeah.
So they're moving into newer homes.
Well, and a lot of newer homes are built like farther away from city centers.
Yeah.
Farther and farther away. So I just thought that was interesting. Let's see. What else is going on? Now, here's what I thought was fascinating. St. Louis Fed, using the data through the week of August 19th, the St. Louis Fed expects the real GDP will increase at a 3.5% annual rate for the third quarter. The GDP now from the Atlanta Fed, I think it came down a bit, but they're at 3.4%. The New York Fed model was somewhere up. They actually came in above 3%. So are we going to get that 3% print?
I still don't think so. So Bullard kind of clarified that in an interview on CNBC. He has 2.5% for the forecast horizon. And forecast horizon is defined as the forward-looking 2.5 years from now. So he has 2.5%, and in order to average that 2.5%, it has to grow at 3.5% in the coming year. So he really is. He's kind of reverse engineered. I don't know that he was trying to explain. He's like, the way the Fed looks at it, we don't necessarily believe we need to have a 3.5% print every quarter for the next 4 quarters. We just think we're going to see fluctuations that it will average 3.5% over the next year, and then it will end up being 2.5% for the next 2 years, 2.5 years. It's weird. In other words, it doesn't matter. Like, don't look at it. It's more mathematical economics talk than it is trader talk, is what I took from it.
Yeah, well, I was looking at the Market Flash U.S. Services PMI report that came out, which it's still above your magical 50 mark. It came in at like 50.9 for stuff, but it is slowing.
That's growth.
The ongoing lackluster economic growth signaled by the Flash PMI suggests GDP growth is failing to accelerate in the third quarter from the weak 1.2 pace seen in the second quarter. That 1.2 pace, however, was revised down today to 1.1. Yeah, it was revised. So this is the third straight quarter of weak growth. The Chris Williamson, the chief business economist from this report, says historical comparisons indicate that the PMI is signaling an annualized GDP growth rate of just under 1% in the third quarter based on the data for July and August. So
sounds about right.
So he's saying just under 1%, but a bunch of these Fed models are saying over 3%.
Well, I mean, I think it's duration, right? 3.5% annual rate in the third quarter of 2016. I think he's trying to clarify that they don't mean there's going to be 3.5% print.
Okay.
That's what he's trying to say. He says it's at an annualized rate, it'll be a 3.5% annual increase, but that's not the way the numbers calculated. The Fed model's different. And there was a Fed governor this week, a former Fed governor, and I don't remember his name, and I wish I would have wrote it down. He said the Fed models are unreliable. He basically said they don't correspond to what everybody else has out there.
And I just have one more. This ties back into Ludicrous.
Mm-hmm.
Bank of America's Michael Harnett, he published a brief note this week titled "The Liquidity Supernova" was the first part, and this is some interesting facts. There have been 667 interest rates cuts by global central banks since Lehman Brothers collapsed. That's a big number.
Yeah.
G7 central bank governors have been in their current posts for the collective 17 years, yet only one, which was Yellen in December 15, has actually hiked interest rates during that time.
Mm-hmm.
There are currently $12.3 trillion of negative yielding global bonds, 28% of total. And there's currently $8 trillion of negative yielding sovereign debt. 54% of total is negative yielding sovereign debt.
Wow.
Wow. Not going to end well.
Now, we did have some positive economic news.
Yep.
Durable goods.
Durable goods, yes, came in stronger.
4.4% versus 3.3% in July. It was expected to come out lower than that. Also, new orders for U.S. manufactured capital goods rose for a second straight month as demand for machinery picked up. But that's only the second straight month, so it can be a blip. It could be bottoming. We need a lot more data before that becomes the point that everyone should look at.
So, yeah, we still have a lot of mixed data.
Yeah.
A lot of mixed data.
But apparently, according to Yellen today, we're at max employment.
And we're at price stability, and
we've reached max employment.
But the neutral rate is 0.
Yeah.
Exactly.
Makes no sense.
Why does that make no sense, Bob?
How could we be at max employment? How could we be at max employment and the neutral rate be 0?
Is this like, well, we're going to raise the price so we can get the medicine to more people?
I guess. I mean,
yeah.
I don't understand it. Max employment, yet the neutral rate is 0. That would mean that when we're approaching max employment, okay, and we should be stimulative, the rates have to be negative, which the U.S. has never had.
They're setting this up. You know it's going to go there.
Yeah.
You know it's going to go there because there's going to be another downturn. There's going to be some event. There's going to be another downturn. We're already 8 years into the recovery cycle. It's not going to go another 8 years without some kind of downturn. You know what's going to happen. They're not going to get rates back up to anywhere, even if they hike it in September or December, even if they hike in both. They're not going to. If they hiked in both, where's it going to be at the end of the year?
Just under 80 basis points.
Yeah. So
it won't even be at 1%. So the range, we don't have time for this right now, but we'll explain the Fed funds rate. Fed funds rate is actually a target, and the target right now is at 50 basis points, and the Fed funds rate has ranged from 25 basis points to 67 basis points. For everybody who doesn't know what a basis point is, 100 basis points is 1%. So 50 basis points is a half of 1%. So the Fed funds rate is a target. The rate fluctuates every single day. And while it's been at 50 basis points or half of 1%, the target is the actual rate has been on the low end. It's ranged between 25 basis points and 67 basis points. So if they jack it up 25%, if they jack it up 50 basis points, it'll be at 1%. But most of the time, the rate will be below 1%, the actual rate. That would just be a target rate.
And just to reiterate, the average cuts when you go into a recession are around 4%.
Mm-hmm.
So they're not getting back to 4% anytime soon.
No.
No.
Today's edition of The What and the Why is brought to you by MotiveWave Software. MotiveWave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. MotiveWave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, ratio analysis, but it's presented in a very easy-to-use way. MotiveWave has a product to fit any budget and any trading style. And one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Let's get into the what and the why.
My why is I have to tell this story a little bit, but I'll leave names out. One of my I'm one of the CNBC Futures Now traders, and one of my fellow Futures Now traders. He disparaged off the air. He disparaged technical analysis, and he said that I don't think technicals drive the market at all. If they do, maybe it's about 10%. It's fundamentals that drive the market. Here's what I want to talk about in the why segment: is that people who say technicals don't drive the market don't understand what technicals are. Technicals are just things that aren't fundamentals, things that are based on patterns, price action. A lot of people do things like Gann and Elliott Wave and things like that. That all falls under the heading. Fibonacci all falls under the heading of technicals. All technicals is human nature represented by price. That's all it is. So here's this particular guy actually will say support and resistance levels. That's technical. Now, the way that I've always worded it, and Mike's never disagreed with me, so I'm going to speak for both of us on this, is that technical analysis is the steering wheel, and it's the direction that you point your car, whether it be north, south, east, or west. And fundamental information and news is the gas pedal. So all we are trying to do, because Mike and I both trade what would fall under the heading of technically, all technicals are trying to do is get you pointed in the right directions. Technicals cannot drive the market because technicals are rearward looking. They can project where things are going from a perspective of having a price target. But of course they don't drive the market because something else has to drive a technical pattern to trigger. All they're doing is guiding you in the right direction. And they've been proven in my experience. They've been proven in Mike's experience. And most of the successful traders that I know, and most of the successful traders historically, I'm not talking about Warren Buffett, he's an investor, I'm talking about traders, will have some form of price action in their model. Whether they have price action people on staff that tell them where to buy something that they like or where to sell something that they no longer like. Technicals, nobody that follows technicals claims that technicals drive the market. Technicals are an if-then statement. If this happens, then this will happen. Well, something has to drive the if part to happen in order for the next thing to happen. So people who talk about technicals, like you'll hear these CNBC guys do it all the time. They'll go, right now the market is trading very technically. Well, considering that technicals involve price, the market is always trading technically because the prices are always reported. When they don't have a fundamental reason for a move, they say it's trading technically, and they don't know what they're talking about. They have no idea. So it's a myth of technical analysis. People who don't understand it think it's a price driver. It's not. It points to prices. It doesn't drive prices.
Would an EKG be a good example of what that might be
Absolutely.
like? Okay.
Absolutely. If you say that the heart is beating because of the EKG, that would be a good example, yeah. I mean, the EKG is reporting what the heart is doing, and it can predict what might happen, but it is not driving the heart to a heart attack, and it is not driving the heart to heart health. It's just reporting it, and it's just pointing out what may or may not happen. And that's what technicals do. It's a great analogy.
Yeah, truly factual data that's undisputed. Yeah. Right.
Yeah.
Exactly. Excellent.
And then the predictions you might make off of an EKG are not factual. They're speculation based on past history, based on past patterns predicting things.
And guess what I'm going to do right now?
Excellent.
What are you going to do?
Some technical analysis. And I'm going to project some things. But the market, it's foiled me again. Cursed market, you foiled me again.
Yeah, but you got a trade that's working, and it started working while we were talking.
All right. Well, it's a Cisco trade. I'm mixing in some stocks with there. Cisco's, it came off some major lows earlier this year. It was down to 22.46, it's rallied up substantially in there. It came back to a deep 50 EMA R zone trade, which broke above key levels yesterday when it closed at what was the close? 31.29. So I'm like, hey, this is great because I can call out these levels for people. They might have time to get in it. Well, my first level was 31.76, and right now it's traded. It already traded up to the high of, what is it?
31.66 is what I have as the high right now.
Yeah, 31.66, and I was looking for a first target of 31.76, so that was probably off the charts right now. Second target is 32.27 based off this pattern, and these are key GAN levels. Projections higher based off of past evidence that we've gathered. Again, these are what? How do we want to phrase that, Bob?
What?
See, I just blanked out. Yep, I blanked out. There we go. All right, now I'm tuned back in. And then the final thing, I think Cisco is going to retackle its highs from 07.
Retest?
Retest. I said retackle. I'm going into football season. Retest its highs from 07, which are 34.24. So this, if you own this stock, we have a couple intermediate targets, one which is almost hit because it's rallying really strongly today. But then I'm looking for this retest of the 34.24 mark, which I will think we'll see easily this year. It's not going to retest its all-time highs yet, which were 82 back in the .com times.
Love it.
But that's my little stock segment for the week.
It's good. That is the what. I covered the why, and guess what?
What?
I'm can't tell if that was static or an explosion. I am done. This is Bob Ichino signing off.
You're not done yet, because I have a question for you. Are you going to the new axe throwing place coming to the West Loop?
I've actually not heard about this yet.
All right. The axe throwing, which is quoted as modern day bowling. We actually need a Sports Corner sound effect. There we go. It's coming to Chicago in the West Loop. Now, I was reading this article earlier because I was just picturing Bob down there throwing an axe. They do not serve alcohol, but it does allow patrons to bring their own food and beer to the facility. And It's, quote, it's more about having a beer with friends and throwing axes.
So for me to go to something like that, and literally, like I would aim it at the target and it would slice off the guy's head to the left of me. I gotta go. Cheers, guys.
Talk to you guys later. Bye.